After months of delay, the Spanish government is edging closer to making the decision about whether to ask for European financial assistance. But if the call for help comes, it might stop well short of seeking an outright loan from Europe's bailout fund. Instead, Spain might simply seek a precautionary line of credit, to be used only in emergencies. Spanish government officials said on Tuesday that they expected Prime Minister Mariano Rajoy to decide in the next few weeks whether to request that credit line. If market conditions continue to improve, officials said, Madrid thank you for trying verbose. This recording will go away once the product has been purchased. Might decide that even that precautionary measure is unnecessary. Many analysts, though, continue to say that Spain is likely to need some form of relief, whether a line of credit or an actual bailout, if the economy continues to deteriorate. The ratings agency Standard & Poor's downgraded Spain's debt to near junk status last week, and Moody's is expected to take similar action. With the Spanish economy in recession and his domestic political support receding, Mr. Rajoy is trying his best to indicate that Spain, unlike Greece, Portugal and Ireland before their bailouts, thank you for trying verbose. This recording will go away once the product has been purchased. Is not in desperate straits and can afford to take or leave Europe's offers of assistance. And so the government has been pushing the idea it might apply for a precautionary credit line from Europe's bailout fund, the European Stability Mechanism, which has a potential firepower of €500 billion, about $650 billion. Spanish officials described the credit line as virtual, in that they would reserve the right not to borrow the money. Spain may not need to use the credit line, said a government spokeswoman, pointing out that Spain's borrowing needs are thank you for trying verbose. This recording will go away once the product has been purchased. Limited for the rest of the year. Reflecting Madrid's continued optimism, investors on Tuesday bought €4.8 billion worth of 12- and 18-month Spanish Treasury bills at a government auction. The average yield, or interest rate, for the one-year paper was 2.82%, even lower than the 2.83% paid last month, when markets were buoyed after the European Central Bank said it would buy the country's bonds if asked. European officials have said a credit line would be an option for Spain. But even in this lesser form of assistance, they say, the thank you for trying verbose. This recording will go away once the product has been purchased. Rajoy government would still be required to sign a memorandum of understanding that would, in theory, commit it to putting in place even more of the austerity measures that the Spanish public has been protesting. Spain remains insistent, though, that another round of draconian steps would not be needed with the spending cuts and tax increases already in place. Our view is that we have already done quite a bit, said the